everyone. Good morning. I'm your hostess, Naini, and here is Kelly. Hi, Kelly.
Good morning.
We're here in another episode of Let's Talk Real. And today we're going to be talking about a topic that a lot of people ask us questions about because everybody buying a home wants to know, how can I get some assistance? How can I get some free money to help me buy a house? And today we're going to be talking about the PHFA program, the DPA, and Kelly's going to be going more in detail on that for us. But just as usual, we're going to just summarize our last episode. And last week we were talking about value acceptance, right, Kelly?
Correct. The value acceptance is the new term for appraisal waiver. And Fannie Mae, are the bigger of the two conventional providers, is offering this new value acceptance. If you're purchasing, you're putting 20% down on the property. With a refinance, you can go up to 90%. Fannie Mae has a database of over 61 million appraisals that they can use as a reference. And when we put the information into our system, the property address, more times than not, they're going to be able to spit out the property valuation with the numbers that we put in the system. That way an appraisal would not be needed. So there's a couple different types. So we could get a value acceptance plus property data, a hybrid appraisal, a desktop, or then is your traditional. So the lesser of the traditional, there will be a small cost for some of those. Mm-hmm. However, it will still save in a lot of time because pretty much our system will be able to generate these values. Some with the help of an appraiser or a realtor or an inspector, we can use those outlets, but it's less time. Getting to the closing table, you get to the closing table much quicker, which the appraisal is usually what the holdup is when it comes to closing on a loan. But
you can make your offer a stronger offer as well. So those
correct.
Yeah.
Correct.
Yes.
Pretty big.
Yeah, it's very big. If you want more detail, we definitely went in very good depth of this subject in our last episode. So feel free to watch over our previous episode on that. So myth of the day. So PHFA is very commonly known for being used as first-time home buyer grant. But it's not just for first-time home buyers, right, Kelly? Can you give us some more information on that?
Correct. So PHFA is mainly a down payment assistance program that offers a grant. It's not a product, it's a program through the Pennsylvania Housing Finance Agency. They offer a grant up to 5% of the purchase price, which can go towards down payment and closing costs. Yeah. So PHFA is not a product, it's actually a program. So you can use a conventional loan, a VA loan, a USDA loan, or an FHA loan along with this PHFA down payment assistance.
Yeah.
So
anybody can, as soon as they qualify for it, can use it. It doesn't have to be a first-time home buyer only.
Correct. You do not have to be a first-time home buyer to use PHFA.
Okay.
Yeah.
We can get more in depth now into the PHFA. I know you kind of briefed a little bit, but what does PHFA stand for? I think you briefly mentioned.
I did. It's Pennsylvania Housing Finance Agency.
Awesome.
So what?
We're
gonna So with this agency, it is, like we use the acronym DPA, down payment assistance. It is a grant, like I mentioned, up to 10% of the purchase price. So more cases than not, you will get the 10%. I'm sorry, up to 5% of the purchase price. So, which, depending on your purchase price, it could be a decent amount of money. Now there are limits and income limits. I'm not going to get into depth in that, just because it's a great program for first-time home buyers. A lot of people think that it's just for first-time home buyers, but it's not. Yeah. You can use this if this is the second time you're purchasing a house. So with this grant, The big thing a lot of people ask is it forgivable? And the answer is yes, it is. After 10 years, it is completely forgiven. However, after each year that you're living in the house, it is 10% is forgiven each year. So if you're living in the house for 5 years and you decide to sell or refinance, part of it will need to be paid off, but 50% of it will already have been forgiven. Where a lot of other grants and programs that are out there, they're usually not forgiven. They're usually there like for the life of the loan. There are a few, I think, in Dauphin, Harrisburg area that may be forgiven after so many years, but the PHFA is the biggest one that offers the most amount of money towards closing. So, like I mentioned, you can use this. PHFA is not a product; it's a program that you can use with all of our programs. So it goes with FHA, conventional, USDA, and VA. So, it helps strengthen your offer because that money's there. So we do an automated underwriting. We run through our automated underwriting to get the pre-approval, and that money, that's how we know if they're qualified for that amount of money. So as a realtor, that can be used, to help strengthen your offer. There's no limit to how much you're putting down. You don't have to, there's lots of different things going to play with it with the realtor that helps strengthen the offer. There is a requirement of a mid 660 credit score. So with our borrowers, we definitely pay attention to that. We make sure that their credit is where it should be. We, as a lender, we cannot charge any points along with. So I know a lot of times when it comes to interest rates, people ask, can they buy down their rate? Well, with PHFA, there are a couple of programs within PHFA that can help with the interest rate. But we as a lender cannot charge any particular points that go along with the interest rate. The PHFA offers low interest mortgage and homeownership assistance programs, such as the Keystone Home Loan Program. If we use that does help with the interest rate. So it helps get a lower interest rate. It too all depends on the borrower. It definitely helps bring the interest rate down, but we have to make sure, there are still things that go into play with the interest rate when you are the borrower. That doesn't go away, but it is definitely part of the PHFA program, is the Keystone Home Loan. So one of the other things that PHFA offers, if you're planning to use PHFA, you will have to take the homebuyer, the home counseling course, which when you're a first-time home buyer in a lot of the different grant programs, you are required to take first-time home buyer education courses. With PHFA, it's a housing and counseling education services that you would have to take within, I believe it's within the year of purchasing the home, because that is something.
They usually have you do it before you close. So.
Oh yes, that's what I mean. Within, it has to be within the past year.
Oh yes, you have to have
the application. So they want to see that you've taken it. So.
So
it definitely has to be done before settlement.
Yes. And a lot of people think they have to before they even find the house, but that's not true. If they are under contract, they still can do the class while under contract before the settlement date. And that's still valid. So, and if you do it before you even find a house, that's fine too. You would just have to make sure that class it's within 12 months before you actually settle on a home.
Yes. Yep. So with PHFA, so that because it is a separate program, I do know that once your file is done and you're at the clear to close state, we do have to send it out to PHFA for their final approval, and the time frame on that is usually about 7 business days. So if we are using PHFA, we definitely want to make sure we get everything in that we need to give it enough time to get out to PHFA once our loan is clear to close. So that's just a little detail I wanted to throw in there just because.
Yeah. So which means that this loan would be double underwritten technically because the lender has to underwrite it and then PHFA has to do their final underwriting in order for the file to be fully clear to close.
Right.
And I know that usually that takes about 45 to 60 days, correct? That's the time frame for most PHFA loans.
Usually, yes, unless a lot of if it's a Fairway Advantage product where we actually submit the whole file and get an actual approval done, and then all we have to do is get an appraisal and title. We could get it in within 30 days. So I'm trying to sell the Fairway Home Advantage product to a lot of my customers because I already collect a lot of the documents up front. And if we just submit it in for an actual approval and we get all of the documents for clear to close, it's not impossible to get it done within 30 days. In a busier market, yes, maybe we would say 45 days. But right now, with the market not having as many homes on the market for sale, it's not quite as busy. So 30 to 45 days.
Talk to me. If you're looking to sell a house, please call. We're in a shortage of homes and there's plenty of buyers. You can get a great deal on your home.
Yes.
Please give me a call. Shout out to sellers out there.
And PHFA is a great program, so it does definitely strengthen an offer.
Oh yes. I want to actually give an example of a client of mine that technically did not need the grant, but considering they were looking to remain on the property for at least 5 years, they were comfortable with having to pay the prorated 50% remainder at that point. And it was very minimal anyway. So what they did, they had a substantial amount of money, but they were capped on how much they could offer in the perks of maybe straightening their offer. And if you guys want to find out what things we can do to straighten an offer, we have an episode about that too. But the more things you add to it, of course, the more costs you gain on your closing costs, right? There are things you can offer, but that ultimately becomes more costly to the buyer by offering those things. And they wanted to be able to put the best offer they could in order to win the bidding that we had in place. And this particular client decided to go through the PHFA route so they could gain, for them would be $12,000 more. And with that $12,000 more, they offer more things to the seller in order to make their offer a little stronger. Don't know the result of that yet, but we'll find out. But that's something you, as a new homeowner, can find out. If you're looking to make your offer stronger and you're already maybe qualified as a conventional buyer or VA or FHA, doesn't matter which loan product you have, you can still qualify under the PHFA with your current loan product. So, because remember, PHFA can be used with VA, FHA, conventional, or USDA as well. So you don't have to change your loan product type. But you can go under the PHFA program, get that additional credit, and then straighten your offer because now you have more money and then be more competitive in today's market, especially now it's springtime with the low inventory, more buyers. So the PHFA usually is used for people that are low in cash, but it can also be used as a strategy for people that do have cash but would like to have more cash in order to make a stronger offer. So it can be used different ways.
What was the product that person?
Conventional.
Oh, was it conventional?
Yeah.
I do know with conventional, I think there is a limit to how much you can use for down payment. I think it's 5%.
Yeah.
Because with conventional, you can go as low as 3%, but 5%. So
5%. Yeah. So they were a 5% conventional already, and then they decided to go on with the PHFA program in order to get the additional 5%.
That's smart to keep reserves when you're purchasing a house. So like with using the PHFA, it's free. You don't pay on it unless you refinance or sell your house.
Sell sooner, yeah.
But that's big with having those reserves, keeping your reserves if you have them.
Mm-hmm.
Plus you can offer like different things to the seller, like you said.
Yeah. In this case, now that was the strategy. So even if you're watching this and you're like, oh, I really don't need a grant. Well, if you're like trying to offer better terms and you want to keep more of your own money, in your pocket, and your goal is just remain in the property for 5 years or so, that still might be a great option. In order to, it's free money technically. So even if you decide to sell within 5 years, you're only paying back 50% of that, and that can come out of your equity from your property. So you're not really going to feel it again out of pocket. It's going to come out of your property equity that you built in 5 years. And if you already had put a down payment, in this case for this client 65, technically they already have the equity to pay the whole grant in full if they have to. Which they won't have to. So it is definitely a great way to keep more money in your pocket if you're trying to be more competitive in this market.
Right. And if you decide to refinance, Fannie offers the new value acceptance. So, and when you refinance, there's no lender fees that are involved with refinancing, just your title fees for the new mortgage. But so yeah, in more times than not, you're definitely going to have equity in your property after 5 years.
Correct.
So it's definitely an advantage to borrowers. So do you have any other questions for me to go along with this? I think we kind of gave a pretty good broad.
Yeah. Maybe we'll recap everything then. So the grant the product that we're talking about, the DPA, the down payment assistance offers, is 5% purchase price. So this amount is not actually capped. So it's 5% of whatever purchase price you're going for. The house costs $100,000, that's going to be $5,000. The house costs $200,000, that's going to be $10,000, and so on. So there's no cap. Like some grants, they may say 3% or $6,000, right? Like whatever is lower.
Right.
So this one does not have this cap. So if you're buying a $500,000 home, I don't know if there's a cap on the purchase price.
There might be, but I'm not.
The cap is based on the loan product. So like whatever the loan product cap, that's the cap for the program.
Right, because like with FHA, there's
476.
Conventional, conventional is up to 7. Conventional is like a jumbo loan now. That's 700. I don't know what the exact figure is. It's 700 and some thousand. More than likely, if you're buying a $700 and some $1,000 house, you
won't be doing PHFA.
Won't need PHFA. But it's still available.
I don't know.
Yep. But for like USDA and VA, they're 100% financing. So with getting a PHFA,
buying a house, pretty much no money out of pocket at that point.
Pretty much.
Yeah, and depending on your deposit and how the numbers work out, you might be getting money back on settlement.
Right.
Yeah, because I think the minimum requirement, which is one thing you can mention, the minimum requirement that the buyer has to pay out of pocket when using PHFA is $1,000.
Yes,
I do. So they have to pay $1,000 out of pocket at least. But depending on the scenario, that might be the only thing you pay out of pocket, and you might get money back if you're getting more grants, more credits than you actually is due from you at settlement. So,
and you're usually paying that in your deposit on the house. So most likely your deposit's going to be $1,000 to $5,000, give or take.
Yeah, it's 1 to 2% of the purchase price. So the higher deposit, the more you can get it back if you have extra credit. So sometimes that's why it's good to have a realtor setting up the offer with you, because if we know ahead of time running your estimates for a certain offer for a property, that you might have more grants, more credits than you need. We might do a strategy where we're putting a bigger down deposit, and then that way you can actually get money back, because you cannot get it back if you don't have a deposit that is higher than your 1,000, right? So that has to be in place. So sometimes we use that strategy and like, okay, we know you're going to be probably $3,000 over, so let's make sure your deposit is 4. That way you can get the full $3,000 back.
Right.
Or if for some reason you don't do that and you can get the credits back, we might give you we purchase a home warranty or something like that to kind of use those credits so they're not going to waste as well. So there's different things we can do to maximize, the use of the credit for you. especially on VA scenarios or USDA, when you have no down payment. So only closing costs, and chances are you're probably going to be getting more credit than what you need. So yeah, you can play that along. Then the second thing is that is forgiven with 10 years. So just to reiterate that, every year, 10% gets knocked off. So by the end of 10 years, you're forgiven for the full amount. And if you sell in 5 years, then you have 50% left to pay. But that can be paid out of your equity that you built on your home, which you should have enough at that point, especially if you have already done a down payment upfront, which the majority of people with FHA or conventional probably have it. The only one would be PPA, but you still might have built enough credit in 5 years to pay that down.
Yeah.
And then again, PHFA can be used for every single loan product. So PHFA is not a loan product; is a program. And we got to really read. Everybody gets PHFA; they mixed up with FHA, and it's not.
Yes, they do. That is
so
a big one. It is a big one.
Pennsylvania Housing. What is that? Finance.
Yeah, Pennsylvania Housing Finance Agency.
Yeah. So that's what PHFA stands for. And think about an umbrella, and then there's things under the umbrella. PHFA is the umbrella, and then you have PA, FHA, conventional, USDA underneath that. So that's how that works. You can qualify for any loan product under the PHFA program as soon as you qualify for the program itself.
Right, because FHA stands for Pennsylvania Housing Authority, correct?
Yeah.
Yeah, so so that's the difference. So PHFA is an agency, and FHA, which is also a great product, is Pennsylvania Housing Authority. So that's a product. That's the difference. FHA is the product. PHFA is the program.
Exactly. So hopefully people remember this now. Talking about the requirements, the major one is the 660 credit score. That one is a must-have. If you are borderline, don't worry. Like if you're like a 645, talk to Kelly. She might be able to give you a couple of tips on how to boost up that pretty quickly. There are some things you can do.
We have a credit through our credit advantage system. I can help to do a rescore to increase your credit. And our credit advantage system would tell us what you need to do to get there. So yes, that your pre-approval you need to do first. So that's where you find out where your credit is. And yes, I can help you get there. Yeah. Go on.
And then that's a benefit for the buyers because the lenders are capped on how much they can charge a buyer under the PHFA program. So you are certain that you're not overpaying for any type of lending fees because they do have a cap, and it's kind of like to keep the balance between the credit they're giving you, how much the lenders are charging you, to make sense financially for everybody. So
there are 2 fees that are extra with PHFA.
Oh, there you go. That's good to know.
One, but they're small fees. They're not. Let me find. Here it is. So we do charge a $93 tax fee and a pest inspection, which is $75. So those 2, pest inspection is definitely a must.
Oh yeah, termite inspection is mandatory for PHFA, no matter what kind of financing you're in. So I'm glad you brought that up because sometimes people think, only VA loans require a termite inspection, which is true. But under the PHFA program, all the loan products, no matter what, the PHFA itself requires a termite. So if you have a conventional loan under the PHFA, a termite inspection is still required, and it is paid by the buyer. And there is a different cost depending on which inspector you used for it. If you want to find out which ones are cheaper, let me know.
So the whole pest inspection thing, I know with VA loans, they are now allowing the buyer to pay that pest inspection.
Yeah, it's been a couple of years now. It used to be that the buyer was not allowed. If they're using VA, the buyer was not allowed to pay for the termite inspection. The seller had to, which was such a disadvantage for the buyer because the seller automatically didn't want to deal with a VA buyer because they had to pay for the inspection, right? So finally they changed that. Now the buyer, a VA buyer, can pay for their own termite, which makes their offer just, same playground as the other loan products, and then allow VA, buyers to be a little more competitive as well. I hated that they were forced to force the seller to pay, because that did make their offer a little bit weaker every time we're competing. That's not the case anymore.
Yeah. Yep. So I wanted to put that out there because we just recently talked about that at one of our meetings. So
yeah, that's a good one. Yeah, so that's basically it. This is an amazing program, really. I think it has helped so many people. We focus on first-time home buyers mainly because usually first-time home buyers may not have enough money saved up yet, or their score is not on 700s. But for the PHFA, it doesn't have to be, like we said, it's 660 minimum. If you're close to it, we can help you get there. But it does help any buyer tremendously with that 5% of purchase price, which is a substantial amount, especially when you go towards the $200,000 and $300,000 homes. Now we're talking $10,000, $13,000 assistance, and that's free to all the buyers. It is a forgivable program. Remember this, you do not have to pay back if you don't sell it before 10 years. So ideally, this program is great for someone that is looking to stay in the property for, we say 5 years, because I feel like it's a comfortable time frame to build equity.
Yeah.
It could be great for someone that is putting maybe a larger down payment and selling in 2 years as well. But if you are looking to buy and not putting too much money down now, but you can just sell in 2 years, it may not be necessarily a good program, because then you have to pay that money back and you may not have built enough equity. So we say 5 years because I think that's a comfortable time frame.
I mean, because most people refinance within the first 3 to 5 years of living in their house. So 5 years is definitely a really good
time frame. If you are thinking about staying there 3 to 5 and you are putting at least that 3.5 down payment, then you should be fine to go with the PHFA and not worry about, having to repay that back. But if you are planning on buying and just moving out in 2 years and you're not putting too big of a down payment, it may not be the best program. You might have to look at the numbers more in depth to see if that's a good option or not. But it definitely alleviates the stress, from that money out of pocket right away to purchase a home for a lot of people. And strategy-wise as well, let's say if you do have money, but you want to be able to have more, to offer more, to make your offer more competitive, the PHFA might be a good option as well. Again, especially if you're doing that 5-year term at least. So that's really it. If you are interested in learning more, Kelly can help you. She can see if you can qualify and get you the pre-approval for the PHFA program, which again can be used with any loan product. So if you're still looking to put 10% down on a conventional and get the benefit of the PHFA, you can. Or if you are on the other side of the spectrum where you're doing a VA loan, 100% financing, you just want to make sure you have no closing costs, you can do that too. You can actually get into a home with probably $1,000 in minimum out of pocket and buy a new home. So it is an amazing program for sure. I love to talk about it. I don't think there's enough exposure. And I actually don't think many realtors out there know too much about the PHFA either. Some do, but majority don't, and they don't let their clients know. And then the clients sometimes get upset because they don't know about it, didn't know about it, struggled to buy a home, and now they're like, wait, I could have got 5% as a credit, right? One thing we didn't bring it up too, this program, it's 5% credit that has nothing to do with your seller's assistance. So
correct.
And me as your realtor, if we're negotiating and for some reason we're not in a competing situation, we can actually still negotiate seller's assistance on top of that.
And there's no limit to it. Like
there's no limit.
Whatever the product, like with FHA, you can still get up to 6%.
Yeah. So you could potentially have 11% credit. On a conventional, if you're putting 10% or less, it's 3% cap. So you can still get that. So it's based on the loan product, but you still can negotiate the seller's assistance on top of the credit. So you can definitely be like upside down, like we mentioned, and get money back at settlement, depending on the situation. There are other grants as well. I know in Lancaster you have a tenfold, or you can use it together, but it depends on the buyer. So we have to look at, each person's case by cases.
Yep.
But it can be combined with other grants as well. It can be combined with county grants. Do you know?
I don't know the answer to that. I think it depends on because each grant in those counties have their different criteria. I think you can with some of them.
Mm-hmm.
If I remember correctly, I know we did the grant one a lot back in the beginning when we started these podcasts.
We did the grants episode. Yeah,
I have notes on that one, but if somebody needed that extra grant money, I would check
look into it. Yeah.
Area. It would just be they would be in third, like PHFA must be in second lien position if people understand that piece of it. PHFA always has to be in second lien position. And then the grants would go into third if need be. Because I know tenfold, one of my colleagues uses that a lot. So she asked that question, if we can use it with tenfold, and we can. It's just that they would be in third lien position.
Gotcha. Okay. Yeah, and you guys don't need to understand the second, third position as much.
No, you don't. I don't.
The financial side.
It's
right?
just part of it. In case anybody would ever look into it themselves and they're asked that question, that's what that means.
Exactly. But it really comes down to who can qualify for what. So if you're looking to understand exactly what you qualify for and it can be combined, then Kelly can look into it and find out all that you can qualify for and make sure you're getting taking advantage of the most grants as possible, based on your financial profile. One thing I know for a fact is that PHFA has different grants. We're talking about one in particular that is their best one. They do have others that are of smaller amounts. I know for a fact that different PHFA grants cannot be combined. That I know.
Right.
So if you're looking at the PHFA website, which you can go there and do your own research, you see that there are different programs, but they cannot be combined. So you have to pick the one that you qualify for, or you like the most, and go with that. Me and Callie, we know that the one we're talking about is probably the best one they offer. They offer the most amount of money, and that kind of meets the most people can qualify for as well. So that's why we're talking about this one in particular. But there are other of lesser value that you could potentially use as well, in case you don't qualify for this one for some reason.
Yep.
So, yeah, I think that's it. I don't see any questions coming through. You want to add anything else, Kelly?
I really don't think so. I think we kind of covered a good broad spectrum of what it is, and it really is a great program. So if anybody has questions, reach out to myself or Nini. Nini has done a few of these with some of her borrowers. So but yeah, any questions, please don't hesitate to reach out to us. This is a great program.
Yes, program, not a loan product. Okay, guys, PHFA program.
we can. I would say we should probably do another one based on the details of the more detail of it, maybe in a few months or something.
As a refresher for most people, and then
we can get the spring market comes out, hopefully.
I know, right? So if you guys wanna buy a home this springtime or even sooner, like summertime, later in summertime, and you want to get some assistance from cash for your closing costs and down payment, let's get you in the PHFA. Make sure, if you're not ready now, still talk to us, because we can help you get ready, right? I feel like that's the one thing that people don't do is the prep work.
Yes.
So talking to us before you're actually ready to buy, that's the best time, because then we can guide you and get you prepped with maybe the best score, understanding what you need to prepare, what you need to save, what you need to do to be the best buyer you can be at the right time for you. So just reach out to us now if you're even considering buying a house next year, because we can help you get there in the best foot and put your best foot forward, basically. So, information going down below as usual. So reach out to us, and any social media. We are on Facebook, YouTube, LinkedIn, Twitch, and did I forget something?
Facebook.
Yeah, I
Facebook.
think
I don't think it's in
we're in
Facebook.
all the social media, guys. Just find us. We'll be there. My name is really easy to find. Kelly's also pretty unique, so you can find us. Just look it up and message us. We'll be happy to answer any of your questions. See you guys. Have a good day.
Yep. See ya.
See ya.